What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 24, May the 11th, 2023. We made some trades today, so let's get into it. All right, so coming into today's session, it was the day following the CPI announcement, so we know that volatility will definitely be present in the market. And also, when you add in the fact that we had the PPI number also come out today in the morning at 8:30, that's only going to add more volatility to the fire today, which should provide for some pretty good opportunities. So let's go ahead and talk about today. So we started the open, we sold off, we had a nice sell-off all the way back down until we established this zone about 5 minutes later. So once this zone was drawn, I started to use that as my reference point for my next series of trades that I made with these next three. So let's talk about the first trade that I made. Let's zoom in. So right here, I shorted at the top of the zone, and once prices go a certain amount in my favor, my break even stop gets triggered, and when prices come back, I get stopped out at break even for no loss or no gain. And that's fine with me. That's okay. Sometimes in the market, that's how it goes. But what I don't want to do, and one of my biggest rules, is to respect my break even trades. So if I ever have a trade that comes back to break even, the last thing that I want to do is get right back into that trade and try and force it and tell the market that, you know what, this trade is going to work. I don't care if it came back to break even. I've learned over time that break even trade, respecting that trade right there, protects me more often than it doesn't, because if the market moved the amount of points that I needed to for my break even stop to get hit, and then it comes back, that means that the market, whatever idea I had originally going into that trade, the market is different now. So I need to reevaluate my position and not just hop right back in. And that's the mistake that I made right here on the second trade. First trade being break even, that was fine, but to hop back in, that's just a mistake by me and something I got to clean up. Now this third trade right here, I shorted once again in expectations that prices would push down into the zone and come back down to the bottom. Now that's okay, that makes sense. The trade idea is right, but the execution could have been better, because rather than me going short as we have a push into the zone, I think that instead I should go short once we see prices close within the zone. And that's what I did on this next trade, and you see how that trade actually ended up being profitable for me. Because I think what I've noticed a lot of times is that prices will push into the zone and wick into the zone to try and trick you and get you to go short prematurely. So what I've learned is that you got to wait for that closing price in the zone, and then you can take the short trade, because everything else lined up. I was trading in line with the trend, expecting prices to come back and test a level that has already been established. That makes perfect sense. The only thing is you just got to get the entry right. So that's what I have to work on right there. So then that leads us to our next series of trades down here at area number 2. So after area number 1, we were done with that. We see prices come all the way back down to the 200 level, where we established this zone between 200 and about 225. Now I took a trade right here that was also a loss, and I think what I learned about this trade was that I need to be on time when it comes to taking my setups, because one of my favorite setups is called a bear spike, where you have 3 continuous candles to the downside that are all strong, that align with the trend. So all of that lines up. The trend was down, and we had 3 candles to the downside. If we start right here, so this is 1, this one right here is 2, and this is 3. So on the close of the third candle, that's where my plan tells me to go short at, and then take it back down to my scalp target. So if I would have went short after the close of the third candle, as I should have, I would have made the profits that I was supposed to. But I waited for this 4th candle to be completed, which is not necessarily always a bad idea. Sometimes, a lot of times, when you have a bear spike that lasts for maybe 7 or 8 candles, you can actually go short off the close of that 4th candle and it'll be fine. But the only thing about it in this situation is that you have to remember that when it comes to a bear spike or a bull spike, no matter which one, all of these moves have to come to an end eventually, and more than likely they're probably going to stop or find a exit or a finish line somewhere around a major level of support or resistance. So if we look at where the bottom of this zone was established, it was established at 33,200. Now every whole number level on here, so 200, 300, 400, 500, and so forth, all of those levels are going to play a major role when it comes to the market, because people like to do business around those psychological whole number levels. So if you look at the price action, once this third candle was closed where I was supposed to enter, this fourth candle came all the way down to 200 and tested it, and then immediately moved off of that 200 level and bounced back to the upside. So that right there should have been my signal that, hey, there was a bear spike. That is true. But then the bear spike reached a major level of support and it bounced off extremely hard from that level. So maybe me going short right here isn't the best idea, because for one, I'm trading against the momentum that's coming from the bottom of this support level. It's buyers down here, which is the reason that prices were able to close almost more than halfway higher than the eventual lows that they were able to make. So that's telling me that buying pressure is in the market. So that's a bad idea right there. And then secondly, you really don't want to go short once you're at the bottom of the move. Now, it's hard to really necessarily call the bottom of the move when you're in the market, but certain signs like seeing higher volume right here on these three candles, seeing prices hit a major level of support at 33,200. All of these things are factors that could help me in making better decisions going forward in the future. So I think this trade right here is going to provide a lot of learning opportunities for me, and a lot of opportunities for me to practice getting this trade right going forward in the future. So that's what I learned from this trade here. Now we move on to our next trade within this area of number 2, and we can see that on this trade I was able to go short from the top of the zone and just simply take it back down, not exactly to the bottom. I took it to my scalp target right here, which is interesting because I've had situations in the market where I have a good trade, have a good entry. This right here is one of my setups where I like to trade in the direction that the market was moving before the consolidation got established. So we were moving down before the consolidation. So that tells me that I'm only looking for shorts, and I want to short it from the top and take it back down to the bottom. So as far as the entry goes, the entry was great, but I'm trying to decide on whether or not I should hold it down to the bottom of the zone like my plan says, or to just take my scalp target at 21 points. I feel like either one of those are a good scenario, but I think on this occasion where it makes sense to hold the trade to the bottom of the zone, that's what I should do. So I think this trade was a good trade, but it's more potential for a trade like this, and I think that's important to catch all of the gains that you possibly can, because you never know when you're gonna have to take a loss, and you want to make sure that you have enough gains to offset those losses and give yourself a cushion, so you can have, at least for me, so I can have less pressure on myself, because I know that when I have positive trades in the market and I'm already up, for some reason I just trade better because I feel like it's no pressure. If I don't catch another trade today, I'm fine, I'm already up. But if I do catch another trade, I'm gonna make sure that it's the best that I could possibly get, so that I can add on to what I've already been able to do within that particular session. So that's just some food for thought right there in the discussion about my trades from area number 2. So then let's talk about the zone as it continued to form. Now right here, remember how I talked about getting all of the gains that you can to buffer yourself and protect you from those losses? Well, right here, even though I didn't take trades, I feel like I dropped the ball because I should have. Prices stayed within this zone multiple times. So if we go back to what my original idea was from this trade, it was to trade in the direction of the trend before the consolidation happened, short from the top of the zone and take it back down to the bottom. So I had opportunities to do that right here, at the top of this swing, at the top of this swing, and right here. If I would have took this one, I would have got stopped out, but I would have been able to catch the short trade once prices closed within the zone again, and then took it back down to the bottom. So I would have been able to get at least 3 good trades out of here and 1 loss. So overall I would come out with 2 good trades worth of profit. So I think I dropped the ball on that because those were 2 good trades that I left on the table. And just because you don't trade doesn't mean that you did the right thing, and just because you don't lose money doesn't mean that you did the right thing. And I think that's the lesson that I took away from the rest of the price action that happened in the zone. So as we continue on with our price action analysis, we can see that on the occasions that we actually did break out of the zone, those were actually setting up to become a double bottom. So the first one happened around 10:05, and then around 20 minutes later at 10:25 we had the second double bottom, and then from that point forward we moved from the bottom of the zone back to the top, all the way back down to the, all the way back up to the support level from the zone above that we were trading in before we got down here. And once that happened, I was like, okay, I see a double bottom. Now all I have to do is wait for a higher low to get established, and then I can start going long. So that's exactly what I saw when we came up to area 3 right here. So notice how we came back up to the bottom of the support level for the zone above us. We pulled back and made a higher low. So I know from the previous couple of weeks that whenever you're trading from zone to zone and the trend is up and you see a higher low get formed below the zone, right below the zone, more than likely you'll have enough momentum from the buyers to be able to push prices not only back up to the support level of the zone, but usually up to the next level, the resistance level of that zone that we're talking about. So that was my idea when it came to trade 3, and I took this long trade right here once we broke above the zone and came back to retest it. Now on this trade I was in profit for a while, but when my break even stop got triggered, prices eventually came back and stopped me out at break even, and I'm okay with that because if you see right here, my break even stop protected me from taking further losses. And you can see that on trade 3 I actually learned my lesson from trade 1, where I disrespected my break even loss and had to take another L on top of that. So on this trade I had enough discipline to say, look, I bought at a good entry price. I think if I got stopped out at break even, let me reevaluate and then make a better decision once I see more price action. So I'm glad I was able to have some discipline right there. That's definitely a good sign today. So then as we get rejected from the zone, we come back down to retest the resistance level from the previous zone that we just broke out of. Now if you think about market structure, that right there is textbook. You break out of one zone, come back up to retest the next one, and then drop back down to find support at the resistance level of the zone that you just broke out from. Basically what that means is that you're simply coming back to retest the previous swing highs. So in an uptrend, that's exactly what you want to see. So look at how we made a swing high right here and came back to retest this swing high that was established maybe 30-40 minutes earlier. So it usually always happens like that when it comes to the market. So then let's talk about our next couple of trades down here at area number 4. So we can see that once we came out from trade 3 up here, we see prices push down, create a lower high and another lower high. But at the same time, we also created one of my favorite chart reversal patterns, which is called a downtrend reversal with a higher low that gets established. So in this scenario, we had a double bottom, which acts as the downtrend reversal. We had a push to the upside, and then we had this higher low that eventually ended up getting formed. So my idea, once this higher low formed, so I believe that the higher low formed right here when we had this green candle, and then we moved to the upside. I actually went long on this candle after it was a green candle all the way near its highs, and it closed back down towards the wick, because I'm thinking if this was the higher low, this would be the support level that I would draw right here off of the body of that wick. Well, did I say off the body of that wick? Excuse me, off the lows of that body, I would draw my support level across, and then I would look to go long as close as I can to that support level. So that was my idea on this trade right here, but I was just a little bit too early. And also what's important to notice is that just because your setup has a certain level that you want to go long from, you also want to take into account what's going on in the market right now, right then, because we have the zone maybe 10 to 15 points below my entry. So I'm like, well, wouldn't it make sense to go long at the bottom of the zone? That would, well, excuse me, not at the bottom of the zone, but at the bottom of the support level. So I'm saying, that does make sense, but at the same time, I don't want to miss my move. And I think that comes back to being patient. Look, if you see your setup, sometimes it's going to be super easy to take your setup. It's going to be an easy trade. You see it, boom, you trade it, easy money. But other times in the market, it'll be back and forth, because it's some people in the market that recognize what they see and they're going long. But until everybody recognizes the pattern that's occurring, the move really isn't going to happen. So for that recognition to happen, it takes time, because look at all of these wicks we had. Remember how I talked about lower high, lower high? It's a lot of people that are seeing those lower highs and saying, man, I don't know if I want to go long right now. But eventually we can tell that over time, once bulls in the market and buyers saw more price action that was bullish for them, they started saying, you know what? I don't care so much about those lower highs as I did a couple of minutes ago. So it's about patience and waiting for your setups to form. So I think that's what I learned right here when it comes to area 4. So let's get back to this trade right here. Once that higher low was established, I looked to go long, but I was much too early, which is fine. But then I come back on the second trade and I buy it from lower prices, which is good. That's the right decision. But where I dropped the ball right here and went wrong was I didn't let my trade play out the way it should have. Because if you look at my stop, I closed this trade out for a manual exit rather than letting my stop get hit, because I was looking at these lower highs. Well, excuse me, these, lower highs right here. And then I was looking at the overall downtrend that we had been in all session long. And I said, man, I know I'm seeing a higher low that got established right here. But what about these lower highs right here? You could draw a bear channel from the top of this swing, connect it through this wick, and extend it out through the market, and you have a bear channel. So I saw my setup, but it was so many other conflicting signals. But I just think that this is a lesson that I've actually harped on a couple of times in the past, where if you take your setup, everything lines up the way that it should, you got to be willing to accept the risk that comes with that trade. You have a possibility of getting stopped out. That's why you have a stop loss, to protect yourself just in case your idea doesn't work and prices go against you. So you got to give your idea time and room and space to work. So that's what I need to focus on when it comes to my best setups. It's not enough to just identify the setup. You also have to trade the setup the right way. And if you trade it the right way, you increase your probabilities of being successful dramatically. So you always got to make sure that you remember that. So after that, I started to become really frustrated, honestly, because look at how I saw my move and then it moved up without me. I had my profit target up here at 87, so I would have entered at 37 and got 50 points out of it if I would have been able to hold my trade. So I was definitely frustrated after this swing, and I took a revenge trade at 5, and I'm very disappointed that I did that, because first of all, if I'm going to take a revenge trade, why don't I take a revenge trade that makes sense? But then again, if a revenge trade makes sense, it's not a revenge trade, it's actually a good setup. So that's the difference, I believe. Because look at what I did up here. Prices were at the top of their swing. They made a swing high. They pushed past both of the zones that we had drawn on the chart. So that means that everybody who wants to buy at that point in time has already done so. Most of the action up here is more than likely going to be profit taking, and all the people that went long getting stopped out like me. So that's just a bad trade up here at 5. I would say the only reason that I looked to go short anyway, because off of that level, was because of this previous resistance that we had established earlier in the market. So I'm thinking if the overall trend was down, we have resistance up here. If there was anywhere for the market to find resistance and turn around, that should be the spot. So I was thinking that, but I went long instead, because I'm thinking, well, whenever there's a strong bull trend, the exact place where people think the short is going to happen is where you should go long. So that's exactly what I was thinking on trade 5. But going long from higher prices, it just doesn't work consistently enough to be able to depend on that to make profits day in and day out. It works in certain occasions, like I've showed you guys the bull continuation spike in the post pattern on some of my previous videos. Those are the scenarios where that move works, but you also want to make sure that the trend is clearly defined. In this scenario, you don't really want to use those continuation patterns because the trend isn't 100% defined. I would say it's like 70% defined, because you have people that are recognizing this uptrend after the double bottom and the higher low. That's fair. But then you have people like me who are still saying, well, what about all of the strength that we had coming down into these prices? Eventually the sellers will step back in and start selling off somewhere again, right? So whenever you can't really, with a definitive answer, say that the trend is going one way, you don't want to look for those continuation patterns. So I think that's something I can learn about this trade right here at 5. That's just not the right decision to make at that point in the market. So then we see prices come back into the zone, close inside of the zone. So I started thinking, okay, the idea I had about the resistance level up here from swing high number 1 holding up is starting to come to fruition. So I'm saying, well, I'm not going to short it right here because that would be me shorting from the lows of that zone and the lows of that swing. I know that's a bad decision. So no, instead I want to place my order up here to catch what would be a potential lower high. Because think about if prices actually turned around right here where I went short, that would have been the lower high in comparison to where we made this previous swing high, and that would have been exactly what I was looking for. Because when you add that into the fact that the overall trend that day had been down, and then we had resistance over here at 1, everything would have lined up right there. But where I went wrong was that even though I acknowledged all of those potential setups for the short side, what I ignored was the fact that we had 2 higher lows. So going short against one higher low is bad enough, but to go short against the second higher low in the series, that's just a bad decision, because a higher low is the market's way of communicating to you that buyers are stronger than the sellers, which means that the uptrend is probably going to continue and prices over time will move higher more likely than not. So that's actually one of my biggest rules, which is to not go short against a higher low and don't go long against a lower high, because those situations are low probability trades, and that's not really what I'm looking to take and not really what I'm looking to trade at all. So I think me ignoring that was the biggest mistake right here, because it's not like I'm looking back on the market after everything was said and done and saying, oh wow, there was the higher low at 4 and there was the higher low above right here at 5. No. I realized all of those things when I was in the market, in the moment, in the trade, and I still made the conscious decision to stick with the trade. I should have let my ego fall and put my ego to the side and said, look, I'm in the trade based on what I thought was going to happen, but the things that I was looking for fizzled out and are no longer present on the chart. So if my idea isn't available anymore, then I shouldn't take this trade. I need to get out of it. But I just said, you know what? I'm just going to see what happens. And that was that was a bad mindset and a bad way to think about that entire scenario and that entire market situation. And after that, I had to call it a day, not only because I was just making bad decisions, but because if you look at my losses, I was almost at my loss limit. So the most that they'll let you lose is $1,000 in one day, and then you get kicked out of the challenge and it's over for you. So I want to make sure that no matter what, even through all of my mistakes and bad decisions, I never get kicked out of the challenge, because I'm trying to pass the evaluation, and the goal is to always be able to survive and come back the next day. So despite all of my bad decisions, when it came to making the most important decision of the day and deciding to stop trading, I think I was able to do that. So I'm not going to necessarily give myself a pat on the back for that, because I did the right thing, but I did it much too late. Because for me to stop at 900, that's pretty much me stopping because I didn't have a choice. If I took another loss, it would have been more than $100, and it would have put me over my loss limit. So I really didn't have a choice about being disciplined right there. I had to be disciplined by force. But I want to learn how to be disciplined by choice, because it's no reason I should let my losses ever get to the $900 mark ever. If anything, my losses should be capped at $500 per day, because if I'm trading 2 contracts, that means that I'm trading $10 per point. My stop loss is usually about 14 to 15 points on a full stop loss. So if I take a full stop loss 3 times, that'll pretty much put me at around 450-ish, somewhere around there. So give myself an extra 5 points, $50 of leeway room. And pretty much if I have 3 bad trades throughout that day, then I gotta stop. And not just 3 bad trades, but 3 bad trades in a row would get me to that point of my loss limit being hit. And that's where I have to stop. So that's something that I need to implement, because I don't know what I was thinking earlier. I just thought that I'll have enough discipline to just automatically respect my loss limit. But no, no, no. The same way I plan for all of my trades for when they go well, I need to also plan for the days where things don't go well, because what's the point of coming in and day out and making good profit day after day after day just to give back like 3-4 days worth of profit on one bad day? I didn't even make it to the end of the session. I had to stop trading an hour and 20 into the market. So an hour and 20's worth of work gave back 3 days worth of profit. That's just not a recipe for success over the long term. So I think that's why it's so important that I need to implement my loss limits, because look, I believe that more likely than not, if I come into the market and follow my trading plan, I can make profits consistently. But I'm not naive enough to believe that I can make profits forever. Eventually, one of those days are going to come where you just offer your game and you out of rhythm with the market and you're taking loss after loss. You don't want to keep forcing the issue on a day like that. You want to be able to pump the brakes, call it a day, take your losses, whatever they may be, reevaluate, go into your back testing session at night, practice hard, get it right, and then come back the next day and get back to what you usually do, which is following your trading plan, making the right decisions, and being consistently profitable. So I think overall, those are the biggest lessons I learned today. And even though I took big losses, I think the first step in me being able to bounce back from this is to be able to identify what I did wrong. And I think I'm coming on here and being honest enough with myself and you guys to really just admit all of my mistakes. I don't think it's anything on here that I sugarcoated or tried to skip over. Like, I just messed up today. So I think that's the first step, recognizing what you're doing wrong. And then the next step would be to go into your practice sessions and focus on correcting all of those mistakes. So I need to focus on being more disciplined with my break-even trades. If I'm going to look to short when coming into the zone, wait for prices to close first. Respecting my break-even trades, once again, down here, and not getting into the move too late. When you see your move and you see your entry, you take it. You don't hesitate and wait until the second entry. No, you take the first one that you get. I need to work on taking my trades all the way back down to the target, not just getting out because I see a good amount. It's not about the dollar amount, it's about the point amount. How much did you make on that trade, and did that trade follow your trading plan the way that it was supposed to? And then also another improvement would be to, when you see your setup, once again, take it, don't hesitate. That's what I learned from the zone. Down here, respected my break even, we're good on that. Trade 4, I need to work on holding my trades that I believe in and accepting the risk that comes with my best setups. That's just part of being a participant in the market. You have to accept the risk. Up here at 5, not buying at higher prices, not making impulse decisions and revenge trades after a move happened that I could have potentially been in, but for whatever reason I missed it. So those are all the things I need to go into my back testing session with and practice on and make sure that I improve those things. And then that's when I believe that I can start making those steps towards improvement, because I've had so many days where I've done the right thing, but to come and have a day like this is just unacceptable. And you know, I had a day like this last week also where I had $900 worth of losses, and I thought that it would never happen again. But that was just a thought. I never put a real plan behind it. But today will be different, because I don't ever want to see a loss like this ever again in my trading career, as long as I'm trading 2 contracts. The losses should never pass above 500, and I'm saying that right here, right now, and I'm making it known so that if I ever do that once again, y'all can come through in the comments and be like, Ty, you slipping, you messing up. So I just think all of those things, if I focus on those, will just get me back to the point that I know that I should be at, which is making the right decisions, man. So I would say overall today, I'm disappointed in my performance, but I'm optimistic going forward because I know exactly what I need to work on, and I'll clean it up and I'll get better, come back on Friday and do my thing like I'm supposed to. So with that being said, I appreciate you guys for sticking with me to the end of the video, man. I hope you guys learned something from this. Tomorrow will be day 25 on Friday, May 12th, 2023. So until then, you guys, take it easy.